Anduro's sidechain ecosystem in talks with Portal to Bitcoin on all things atomic swaps in the L2 ecosystem, interoperability. I'm joined here with Chandra, the CEO of Portal to Bitcoin, and without further ado, I will allow him to introduce himself.
Hi everybody, my name is Chandra. I'm the founder and CEO of Portal to Bitcoin. We are a custodyless interoperability layer on Bitcoin, and we're here and very excited about supporting the sidechain ecosystem on Bitcoin.
Awesome, Chandra. Thank you so much for being here today. Can you please, just to start us off, elaborate a little bit further as to what is Portal to Bitcoin's overall goals, and what is it looking like over the next few months as it evolves and integrates more chains?
Got it. So the reason we started was with a specific goal in mind, which is to make sure that all of the sidechains, L2s, other blockchains will need a custodyless, trust-minimized, interoperable interface with L1 Bitcoin. Because we don't think the Bitcoin block space is going to continue to be a settlement layer for just BTC, the asset. We think it'll continue to evolve into the settlement layer for millions of markets. And you're seeing the beginnings of that with some L2s, more side chains like what you guys are building. And what Portal allows you to do is, with a very low lift deployment, you can have a completely non-custodial AMM for your sidechain assets, L2 assets against native BTC, any other assets that are supported by Portal, like any other sidechain assets, L2s, or native BTC, and for NFTs and other tokens on L1.
Very interesting. So it's quite clear you're keeping your eye on the ever-evolving space of DeFi on Bitcoin. Where do you, as the CEO of Portal to Bitcoin, see that evolving in the next 6 months, 12 months, 18 months?
So the most interesting thing is, at the beginning of the year, the general consensus was everything that was built on Ethereum is going to be rebuilt on Bitcoin, and that's still a valid thesis. But we think there's going to be more use cases, like, when you think of a side chain, you're basically issuing assets. You have your own consensus mechanism, you have your own asset issuance mechanism, the way you keep track of them. Some of them will come to resemble the DeFi experiments we saw on Ethereum, right, with EVM-compatible sidechains. We think there's going to be new ones. NFTs are, I think, just the beginning. You'll start to see tokenization of real-world assets, and by that, I don't just mean, stuff with efficient markets already, like equities, real estate, etc. But we'll see new kind of assets, like in-game assets, completely digitally native assets that are not on-chain yet. But you'll start to see Bitcoin block space as a very efficient settlement layer for many of those markets.
That's very interesting, and definitely a very relevant use case many people are talking today is this RWA tokenization on Bitcoin. We had a whole chat about it before. What does success look like in your eyes from an interoperability standpoint once these assets are deployed and are moving from chain to chain using Portal to Bitcoin?
So for us, the thesis is there's only one L1 that matters, and that's Bitcoin. Everything else is either going to become an L2 or is going to become irrelevant if it doesn't have trust-minimized interoperability with Bitcoin, basically. So you have to have efficient swapping, friction-free swapping mechanism with base layer, Bitcoin, BTC, the asset. And so that serves as the settlement layer. So if you look at the history of cross-chain trading or cross-chain interoperability, 2010 to 2019 was the reign of centralized exchanges, basically. And from then we saw some experimentation with on-chain custodians, like multisigs, bridges, vaults. We've seen wrapped derivatives, etc. But empirically, both of those models have proven to be very, very high security risks for user funds. So we think with the technology we're bringing to the market, BitScaler, custodyless is the model. That's the huge transformation that we're seeing. So people are going to start to understand the security risks involved in custodial alternatives. And our thesis is if you make interoperability as efficient as a centralized exchange, meaning it's cheap, it's fast, doesn't need on-chain confirmation cycles or settlement until periodically, which is kind of analogous to how you typically trade, right? You transfer your assets to a centralized exchange, you trade a number of times, and then you withdraw. That model is replicated completely in a custody-less manner. So for us, success is basically transaction volumes, number of asset pairs that are trading, and number of L2s and sidechains that are using Bitcoin as a settlement mechanism. And I think it's inevitable because the security of Bitcoin is unparalleled, unrivaled, unprecedented. So.
Got it. So it's quite clear this non-custodial aspect is one of, if not the feature that makes Portal to Bitcoin stand out. Are there any other features that are currently implemented or you're looking towards in the future that are going to really make you stand out in the market?
Yeah, so great question. So non-custodial, you could do atomic swaps on L1, but that basically defaults back to the problems that you've had with layer 1 atomic swaps, which is you got to wait for confirmation cycles. You have to have a reasonable certainty about block times on these various blockchains with different consensus mechanisms, etc., or replay risks. When you move the transaction mechanism to an AMM, and then everything is happening on an L3, except in the case of an uncooperative close, which defaults to either L2 or L1, depending on whether both parties to the channel are that are in the disputed state, whether they share channel or not, it defaults to L2 or L1. So you're going to get the efficiency of a centralized exchange, right? These are completely off-chain broadcast states between parties to transactions. Settlement happens once roughly every month, and so L1, opening of the AMM or liquidity pool, which is kind of like the AMM, and closing are the only L1 transactions that require L1 fees and L1 transaction confirmation cycles. Everything else is off-chain. And you don't have the constraints of Lightning, which is each participant in a channel has to have an opening and closing. And you have to have an anchor transaction on chain. You have to close, and then once you're there, you can't change the parties to a channel. All of those problems go away with the way we've implemented modified channel factors on BitScaler.
Got it, Chandra. Yep, that makes a lot of sense, and thank you for that thoughtful answer. Going forward, what's an ideal scenario in which Anduro and Portal to Bitcoin continue to work with one another to sort of enhance both sides of the product?
Yeah, so I think you guys are doing a wonderful thing, starting with not just creating a sidechain and issuing assets, but actually thinking through the life cycle of the user who actually acquires them, trades them, settles. And so having this trust minimized instantaneous settlement infrastructure plugged in right from the beginning is the right way to go. And to be frank, a lot of sidechains are adopting the custody-less model because eventually you're going to, in the market, you're going to see customers asking the question whether you have a trust minimized interoperability or a peg out, permissionless peg out into BTC or not.
Right.
And those sidechains and L2 ecosystems that actually have that are going to have a huge leg up on those that don't. Right? Security is such a thing, it's a very asymmetric thing. In that until something bad happens, nobody cares, and then suddenly everybody cares. It's not very predictable or linear, but it's actually very abrupt. So, because it has happened enough number of times in the past, people are much more conscious about security now. Because I don't have to tell you how many bridges and vaults are attacked every day. I mean, we used to make a big deal out of this years ago, but now it's so commonplace that we don't even care. Right? We assume that some bridge is going to collapse almost on a daily or weekly basis. So.
Yes, definitely resonates with conversation, constantly seeing these headlines about these compliance issues, if you will, right? Security issues.
Absolutely, yeah.
Interesting. So we're here at the Bitcoin conference, right? How are you finding interacting with the broader Bitcoin community? What is the demand looking like, and what's the excitement around the portal to Bitcoin?
For us, the L2 sidechain ecosystem has been very receptive, and and traditionally the way you measure whether or not you're getting to product market fit is like how fast is your sales cycle and how easy has it gotten over time. And that's continued to be very easy for us because there's no other non-custodial interoperability alternative yet to Bitcoin. Everyone that says our bridge is secure, we have ZK or whatever, it's not the security model of Bitcoin. Lightning is. So we kind of bring that back to the roots of why was Bitcoin invented in the first place? What does self-sovereignty mean? What does permissionless pegout mean? Even if there are pretenders that say, oh, it's secure until it's not, you are at a mature enough stage of the BTC ecosystem and the participants and the users that people are demanding these answers. And so sidechains and L2s that have a permissionless pegout mechanism and efficient DEX mechanism to native BTC are going to have a leg up over those that don't. So for us, the success is, how fast can people adopt this, and how much does it take for them to actually integrate our technology. And both of those KPIs have actually been consistently going down since we started opening up integrations at the end of February. So it's been going great. Obviously, everything in crypto is a function or some kind of a derivative of the price of Bitcoin. So you're going to see some ebbs and flows, but the long-term outlook, the long-term need, we actually think it's time invariant that people are going to demand more security and efficiency. So on a short enough time frame, you can say it's up or down, but long-term, it's directionally being right is a huge advantage, even for you guys. Doing the right things the right way is an advantage in the long term. You may not necessarily be able to measure it in the short term.
That makes a lot of sense. And just to go back to what we were chatting about before when it comes to compliance and security and how that overlaps with custody versus self-custody, right? Can you explain a little bit further, just for the sake of our viewers, why self-custody tends to be more secure and safe for the users performing these atomic swaps?
Right. So self-custody, it depends on the use case. So if you're just putting your coins in cold storage, very few of them get lost forever, right? Like these boating accident myths that you hear are not very common. The issue becomes when you actually want to use the properties of some other blockchain, right? Like let's say you want to exchange your BTC for ABC BTC, and then you want to do these other utility that sidechain or blockchain provides for you. That's all well and good. When you actually want to exchange whatever asset it is on the other side back to your BTC, then you're actually depending on consensus of one or n, it doesn't matter. It's still custodial. And that's where most of the problems happen, is that, yeah, you got the peg in, but you don't have a peg out. So it's kind of like a Roach Motel of BTC.
Right.
And you don't want that situation. And so atomic swaps on L1 could still work. It's just that they're very, very inefficient. And so the balance that you have to strike is between the demand for the services that people want and security, and there's always a trade-off. And until now, we're not aware of any system where you can actually have the speed and efficiency of a centralized exchange, the functionality of a sidechain, and having complete verifiability of contracts on both sides, on both party and counterparties, kind of like Lightning. So it's taken a long time to get here. There's a lot of R&D involved, obviously, but picking needs and user value propositions that don't actually change across time, I think is a huge advantage as an entrepreneur. So if you were to follow every fad or every news cycle, you'll never get there because the there is constantly shifting. If you pick something that is unsolved but is going to be valid for a very long period of time, that gives you an edge.
That's great, Chandra. It definitely sounds like you're working through the development of this product in a very thoughtful way, and obviously the Anduro team appreciates that and look forward to this collaboration moving forward.
Yeah, we're very excited about the ecosystem that you're bringing onto Bitcoin, and very grateful to and here to support you guys.
Awesome, Chandra. Thank you. That's it for questions. Any closing thoughts before we open it up for Q&A?
Check out Portal to Bitcoin, and if you are interested in reading our Blitzscaler paper, sign up, and we're going to send you once it's in peer review right now. But our public test is going to be in a week or two. So check out portaltobitcoin.com and ask us any questions that you may have.
Thank you so much, Chandra. Any questions from the crowd today? If not, we can. Yep, right here.
Is there a solution for a unilateral exit to Is there a solution to a unilateral leg out for a user exit? Does that exist in Bitcoin right now?
Well, that's what we're building, right? So I can say, yes, there is. And the way it works is with, if you're familiar with the concept of channel factories, the constraint of Lightning is that, both parties have to have an anchor transaction on chain. And then once that's set, until you close it, you can't change the participants. So the way we implement channel factories is the hook transaction that actually starts the NFN multisig is on a Tapscript. And so one of the UTXOs, and then you can have all of the sub-channels between n to the n-1 participants being off-chain. So you don't have to have anything default to L1 to create these channels. And then when there is a conflict, depending on whether it's on a 2 of 2 multisig or between parties that are outside of these channels, you default to L2 or L1 because the pre-commitment states are exchanged prior to you forming channels. So you can wait for the timeout period, broadcast that state on chain as an LP, and then close it yourself.
Nice, thank you.
You're welcome.
One last question. So are you doing all this through like mass factory?
Yeah, there's a validation tree. Yeah, exactly.
Okay, so my question is that who bears the burden? Like, okay, I guess first, how deep does the tree go?
How deep does the tree go? That's an empirical question. I mean, it's an efficiency question, right?
Yeah, because if the whole block gets bigger and bigger and bigger, the deeper you go down, you need to actually activate that condition.
Right. So the use case that we're going after initially is an AMM with LPs, and the number of participants can be quite large. If you look at what's prevalent right now, it could be quite large. And then the timeout period is actually quite predictable because we use duplex channels and multiplex channels, kind of like the middle invention between unidirectional channels and edge Lightning. There was this bidirectional channels with decrementing time locks. That's a perfect use case for us because the LP pool period is only 30 days roughly. So
Thank you very much.
you're welcome.
Take this back. Chandra, test. Chandra, thank you so much for being here today. That about wraps it up, and
Absolutely,
really appreciate
my
your time
pleasure.
here today.
Thank you, Aaron. Good luck.
This was great. Check out portaltobitcoin.com. Is that correct?
Yeah.
And Anduro.io.